What's up, everybody? Welcome to the REINVESTORS January 2021 meetup. We are fired up for this year. There's so many great opportunities in front of us and so many incredible things going on in the world right now to be able to take advantage of. And Steve and I were just listening to one of our mentors the other day, Cole Hatter, just share a little bit about, a lot of what's happening in the world right now is actually creating a lot of opportunities for us to be able to have access to more wealth and access to more investment opportunities, and more great things are coming from this. So we're really excited to start 2021 off with a bang and get everyone motivated and excited to come in. Probably hit the next slide, Steve. So tonight's agenda, if you've never been before, it's a pretty standard scenario for us. We'll do a quick welcome, who we are, who are your presenters, so you know that who we are that's hosting this. Then we'll have Steve's going to run through a cool new opportunity that we've been able to get in front of and be able to provide for you guys. And then we have Kyle Kerr coming in. He's one of our sponsors, to just talk about the market across Canada as a whole. And then he's going to dive a little bit into Victoria. I saw a little bit of his presentation and it is very cool. A lot of great information there. Then we have Megan Becker come in, and she's going to answer the little question of, I have some extra cash right now. Do I put into my RRSPs, TFSAs? Do I invest it? What do I do with it? She's going to be able to help answer any of your questions. Her session is just going to be a lot of Q&A and not a lot of presentation. So we just want to be able to answer a lot of your questions. So if you have questions around RRSPs, TFSAs, what should you be doing right now, that kind of thing, she's going to be open and able to answer anything for you. So welcome, everybody. One thing we do love is seeing your faces. I know it's a little bit awkward. It's a little bit weird for some of you. Putting it on allows us to see you. For those of you that don't know, because we can't clap for presenters or do anything, we do what's called happy hands. So we wave like this when anything good is happening. On that note, I would love to just see, is there, it's just a quick show of hands for those of you who have your camera on. How many of you have been to one of our meetups before? Oh yeah, good amount of people. That's awesome. Great. We love seeing that. Also in the chat, like you've seen from a lot of people, if you want to just put in where you're from, what you're doing, build that connection, scroll through there, look at people. It's really nice to cool. It's really nice and cool to be able to meet other people from networks like this. This was built so that we could meet in person and talk and build those relationships. We can't now, but we do have that open chat where it says, hey, maybe I'm looking for a money partner. I'm looking for a working partner. I'm looking for an expert in this area. I'm looking for an expert in Ontario. There's a lot of people in our network now that can source and help you out.
Yeah, one of the greatest things about, sort of just jump in real quick, one of the greatest things that's happened over the last, whatever it's been, 9 months, is the fact that everybody is on Zoom now. And so our meetup used to be just physically in person at Gorgevale Golf Course here in Victoria. We'd have 100 people, but it was obviously limited if you lived in Victoria. Now we get to work with people from all across the country. So it's been really cool watching some partnerships and relationships develop just from meeting in places like this.
Cool. So who are the REINVESTORS? My name is Randy. Above me is Steve on my screen. And together we co-founded the REINVESTORS. We're basically a real estate investment company. And we also do some education, and then are now into a little bit more development. So we kind of hit every gamut across the board. Quick little run around who we are. We founded in 2016. We didn't fund it because we wanted to be rich millionaires. We really saw a big need in the world. There's a bigger mission for us to go on, and really have driven down that trail to be able to help a lot more people, which is really what got us into it. We've transacted over $12 million in real estate now. I think we're like 12.8 million. We've raised about $7 million in capital. We've ran our monthly meetup for over 4.5 years now. It's been about 4.5 years now. We've been doing this meetup. We run other various types of workshops and spoken at a bunch of various different stages, and really just love sharing the gift of real estate with as many people as we can.
I think it might be one of like the longest running REI meetups in Canada. Like, not too many that I've seen that are running longer than this consistently.
Totally. At least here on the island, for sure. So of that comes our mission statement, that we're on a mission to financially educate 1 million people and inspire them to invest in real estate so that they can start living a more fulfilled life. This is Steve and I's motto for every decision we make in our company falls in line with this, where are we financially educating people? Are we inspiring them about what is possible with real estate? And are they using that money to live a more fulfilled life? Are they using it to go on vacations and give back and have more fun and actually really create that freedom that they want? One of the biggest passions that we have is giving back. You'll hear in everywhere we go, everything we talk about is all about giving back. And one day, Steve and I were sitting there chatting, and we just love giving back as part of our business. And we had this conversation, and I can't remember if it was Steve or I, but it's like, man, we just got to go that much bigger so we can give that much more. He's like, yeah, we just got to go bigger to give bigger. And so all of a sudden came the statement of go big to give big, where we're inspiring others to go bigger with their dreams, to give bigger with their profits. That's what we're doing with real estate, is we're building a bigger portfolio, a bigger brand, and a bigger enterprise so that we can actually do more with that money that we make to support and help more people. And Kids Sport Victoria has been our #1 charity that we've supported. I think we're probably close to $20,000 in donated money to them now, just through our meetups and through our charity events and everything. We sponsor the golf tournaments, and we just absolutely love it. So we used to, if you didn't know, charge admission for this meetup and then donate 100% of the money of it to Kids Sport. We don't do that now because of Zoom, but we will be getting back to that hopefully once we're allowed to host events again.
Mm-hmm.
We wouldn't be able to do this without our sponsors. They are so helpful to everyone in our community and getting everyone educated. We have Century West Financial, which is Megan Becker, who's speaking tonight. Prime Real Estate, who's Kyle Kerr, who's going to be speaking tonight as well. Then we have Real File CPA. They take care of a lot of real estate investors. Sitka Law Group here, local to Victoria. Absolutely phenomenal when it comes to real estate contracts. And then the Green Mortgage team, when it comes to dealing with mortgages as investors, they're one of the best in the industry. For those of you that don't know, our meetup's on the third Tuesday of every single month. So you can put it in your calendar right now, grab your phone, go to the calendar, put it in there, February 16th at 6 p.m. Or if you look in your email, you'll get an email after this saying, hey, sign up for our next month. All you got to do is register for that next month and you'll be on here. We have an awesome guest coming next month. She is going to blow your mind with some of the knowledge and skills and what she's been able to create in her life. It is going to blow you all away. So you're going to want to be at next month's meetup for sure.
If you've had any interest in multifamily, your mind will be exploded. All right, now for some exciting news. Drum roll, please, Mr. Mullen. We have some exciting news.
Oh, I haven't seen that slide.
I snuck that one in there, but as you were ready. Yeah, we've got some really exciting news. This is something that has been on our minds for years, and probably the #1 question we get asked for all of our income properties that we've done and for our developments or any investment property that we've acquired over the last 5 years. The #1 question we get asked is, can you accept registered or TFSA funds? And we've always had to say no. Now, thankfully, we have that channel. We have that entity all set up through an amazing partnership with some good friends of ours here in Victoria. So now we have this awesome company, and I'll get into some of the details here, just skimming the surface of it over the next 5 minutes, and then we'll get into the presentations of Kyle and Megan. But you don't have to be an accredited investor. That's always been one of the biggest hurdles, is you had to have like $200,000 in monthly income. You would have to have $1 million net worth without or liquid cash, and all these different hoops you'd have to jump through to be able to work with us. That has basically been eliminated, and so we can accept registered funds, TFSA, and cash going forward into this opportunity. So please be a part of the fun, show some excitement in the chat. We're super jacked about it because it's been a long time coming, and the people that have helped us build this and that we've been able to partner with to build this, it's taken a lot of work. So we're so excited because today, literally like an hour ago, I got a text message from Nick, who's on this call, who's the CEO of the company that we created. And he was like, fellas, guess what? We finally got approval. And so I did a little happy dance and joined in on Seinfeld and Kramer and the gang here. So appreciate the enthusiasm going forward. Just to skim the surface a little bit, we're looking for investment amounts of $50,000 or more in any of those channels, cash, TFSA, RRSPs. How the profit structure is going to be structured is that you, the investor, are going to get a 6% preferred annualized return. So that means that you get paid before we do. And then the remaining profits are going to be split 50-50 with the management team. So the reason we do that is because we always want to make sure that we're treating our investors with the respect that they deserve, as well as showing you that we are this confident in our projects that we're giving you 6% before we take anything. And I think that this really, I guess, solidifies some of the trust aspect and things. And then we're projecting a conservative number around 15-17% annualized with upside too. Oops. So the only kind of caveat to it is that if you're in Ontario or Quebec or the odd other province, we can only accept cash from you. They have their own security system, and it's a little bit wonky compared to what BC offers. So we have to fit within their box. But please do reach out to us, because if we don't have something for you, we know somebody out in that area that would have something for you. The initial term is going to be about 2 years, maybe a little bit over. Everything that we're acquiring is going to be here in the Greater Victoria area. If you're not from Victoria, we have about a 1% vacancy. Depending on what municipality you're working in, it's definitely less. And then the coolest part about it is the partners that we are working with literally wrote their master's thesis on an algorithm that scrapes the MLS data so that we can go find mispriced and underpriced assets here in Victoria. So we're buying it with instant equity, and then we'll BRRRR it, the buy, renovate, rent, refinance, and repeat. So we force that equity up and get to compound our equity. So the investment that we make into it gets to scale rapidly. So the true value in it, to really break it down, is the algorithm that we have, the track record between Parametric, which is the company that we partner with, and ourselves, the compounding equity aspect of things, which I'll touch on in just 1 second, the systems that we've been able to create through the acquisitions, renovations, and our management, which I'll show you, as well as the unique data that we get to use. So basically, to really put it into simple picture form, you've all seen Russian dolls on a mantle somewhere, and you're like, oh, that's pretty. You pick it up, and you're like, what's in there? And you open it up, and you're like, oh, sweet, there's another doll in here. Imagine this is our equity that we buy. So condo 1, condo 2, and then condo 3. And then what gets to happen is at the condo 4 mark, we get to start a portfolio, like leveraging our entire portfolio, and it starts to compound and compound and compound. So you get to repeat that same amount of money over and over and over again from the systems and the algorithm and the compounding equity. So this is how we get to create really awesome returns through this company. And then I just want to give you an example of the types of products we're looking for, and then the after. So this one here, if you can see my mouse, is exactly what we're looking for. It's that 70s, 80s, hasn't been touched in a long time. You can see like 90s appliances kind of thing. This is all over Victoria. We went through one of our biggest booms in the 70s, and this is exactly what they did. And so finding buildings like this that all we have to do is paint the cabinets or replace the cabinets, floor, appliances, paint, and this is what it looks like afterwards. So it's nice and it's clean. Imagine this one beforehand was I'll say dumpster fire. And with a little bit of sweat equity and some right purchasing, we can make it look really, really sexy. And it's not like we're putting like $100,000 into these renovations. These condos are 1 and 2 bedroom condos. You know, we're buying them at $350,000, $450,000, somewhere in that window, and we're putting $15,000, $25,000 into it to make it look this good. So super simple, white shakers, as you've seen in all of our, basically we do this exact same thing on all of our investment properties that we've done to date. Stainless steel, white cabinets, counter sometimes changes, and then floors and paint, and we're good to go. So how does it work exactly? Basically, our first go is we're going to raise about $500,000. So if you think of it like $50,000 as the minimum, it's only 10 investors. We're going to run the algorithm to find what products we want. We're going to do the due diligence on those products. It spits out, which is usually 5 to 10 that actually fit our criteria. After doing due diligence, there's only going to be 2 or 3. We're going to choose a unit, obviously, renovate it to our high quality standards. We'll rent it out. We'll repeat the process until we have 4 or 5 under management. So it's about a $2.5 million raise in total over the next month or two. And then we'll get our commercial mortgage on it. let's say a conservative 60%, we'll get that $1.5 million back and we'll repeat the process. And of course, every once in a while, we're going to find that gem in the market where we want to flip it because it's going to give us a really great cash injection into the company. And then we'll just rinse and repeat, rinse and repeat. So if you have RSPs, TFSA, or if you're a non-accredited investor and you're just sitting there with some money burning a hole in your pocket, just shoot us a quick email, give us a call. Our website's reinvestors.ca and our numbers are on there. And then I'll follow up with some slides from our presenters and some more details in an email after this meetup.
I just put our email in the chat, and if you want to put in the subject line, "I want more info," we'll be able to get you info just a little bit quicker and set up a call with you right away, so we can chat more about it. I saw you asking some questions about accredited investors and RSPs and locations and stuff. You're better off just sending us a message. We can connect with you and make sure that you get the full info. So again, info@thereinvestors.ca, and your subject line, "I want more info." So let's see some happy hands here. For that work. Steve has been very excited about this. Our friends at Parametric have been working on this for like 8-9 months to be able to put this together, and we're very excited to launch it. So awesome presentation, Steve. Now I think you're going to introduce somebody who's going to show why Victoria is such a good market.
Yeah, I'm really excited on this guy here, this sexy face. And I don't know if you can see him right here with my mouse, that sexy face. Kyle, we've got to work with over the last couple of years, more intensely just over the last year. His professionalism here in Victoria has been unmatched. I'll even go on record saying that he's working with my parents too. And that's the type of trust that I have in this guy. So when it comes to knowing the market, he's super intelligent. He works with the Prime Real Estate team, which is also Tony Joe's, if you've heard him on CFAX, the radio. And other than his good looks and his basketball skills, my favorite thing about him is that he's a data geek like me. So I know that there's some data coming that's just going to give you guys a really good insight on what's happening across Canada, as well as kind of forecasting what we think is going to happen into the rest of this coming year, 2021, for the Victoria area. So Kyle, I'm going to stop sharing. If you want, give a real quick intro and then jump right into it, man. Thanks for being here.
Awesome, Steve. Well, I have to really enjoy that introduction, and it's been sad with COVID. I haven't had a jump shot in a while, so I'll have to rework on those basketball skills. But hi, everyone. Really nice to meet you. Kyle Kerr, again, with the Prime Real Estate team. And so happy to be here again as one of the sponsors and presenters for tonight. And as Steve said, we've been talking a lot. I've been doing monthly market updates in the Real Estate Investors community group. And, you know, instead of doing a year-end one, Steve said, well, let's do this as the January meetup. But why don't you tell us a little bit about what's going on across Canada as well? So one of my previous roles within organized real estate was serving as president of the Victoria Real Estate Board in 2018. And what that allowed me to do was travel across North America quite extensively, going to some of the biggest real estate conferences in the world, and really just traveling and learning about different markets across Canada. So what I did was I tapped into those resources, and I have a presentation for you today. I think we're going to start all the way across Canada on the East Coast, and we're going to work our way back to Victoria, just to kind of give you those local insights and where I think is going to happen with the Victoria market moving forward. But what I wanted to start with first was just kind of giving you an overview of the Canadian market in general. And so the Canadian Real Estate Association, this is what I'm a member of. So you can go to CREA.com or .ca, sorry, and they'll have a lot of great statistics. And what I have here is a giant presentation. It's over 100 pages because I had such great intel and insider info coming from my agents across Canada. But what we're going to do is we're going to package this up. I'm not going to touch on every single slide. Steve and Randy are going to make this available for you after the presentation. But I just wanted to hit a few highlights, and then we're going to hit a few key major markets as we work our way across Canada. So this static presentation here will be available in the stats package, but I wanted to show you something on the Korea national website. So this is something called the National Price Map. So if you're ever wondering kind of what's going on in other markets, you can hop on here. Let's bring up Victoria, because that's where I am right now, and we can see that Victoria, year over year, had a 5.7% increase. This is all single family home pricing, the detached SFD market. So Victoria, the typical single family home was up about 5.7% this year. I was looking in the chat as we were all getting introduced, and I saw some friends here from Ontario. I saw some people from Windsor, Kitchener, Waterloo. So let's compare that to what's happening in Ontario. So, Victoria prices are still a bit higher, but Ontario, which we're going to talk about, has been on absolute fire this year. So Kitchener, Waterloo prices up 22%. So we can talk about that. And I've got some great intel from some local agents in Ontario. But the main theme you're going to hear today is overall, the Canadian real estate market has been very, very active. We're going to touch base a little bit in Alberta today. And we know Alberta's been struggling a little bit on the economy side due to low oil prices and some of the after effects of COVID that we're still working through. You can see price points in Calgary are down from where they were, but even Calgary had a bit of a better year this year with a 1.5% increase on the detached side. So just wanted to make you guys aware of this. My job, just like Steve and Randy, is to educate you. I think it's really important for me to empower my clients, empower consumers so that you're making better educated choices when you're buying real estate. So really fun tool there that you can play with. But just kind of coming back to overall what's been happening in Canada, national home sales rose 7.2% by the end of December. As you can see here, monthly sales really started to pick up in the second half of 2020. Of course, when the pandemic first hit in March and April, sales totally plummeted. And then as restrictions started to lift across Canada, most of the markets, most of the agents I've spoken to across Canada have been very, very busy. This, of course, comes from things like low interest rates, people wanting more space due to COVID. You can see some really great charts here. And again, we're not going to dive into every one, but these are most of the major markets across Canada. You can see what their benchmark house price was as of December 2020. And then you can see the percentage increases that have happened for 1 month all the way back to 5 years ago, right? We can look at the Lower Mainland, that's up 46% in the last 5 years. Market like Hamilton, Burlington, which we're going to talk about today, is up 78% in the last 5 years. So think about investing back then, right? Here, big one, Kitchener, Waterloo, we just talked about it, 94%. Niagara region up 110% in the last 5 years. So
nothing like doubling your money, eh?
Exactly. So with this, hopefully, I think our intention is that we're going to educate you enough, and I'm going to provide you with contact information for agents all across the country. So if you do want to start investing in other markets, you can know that I'm recommending you to someone that I trust and know is a true professional as well. So like I said, Steve, Randy, and I, we're data geeks. We love this stuff. I'm not going to dive into every single chart here, but if you do want a copy of this package, just email the guys, email myself, and we'll make sure to send this over to you. But there's a ton of information here, from the dollar volume increases to the sales activity, new listings, and we're going to talk about that a lot today. Inventory is down, and that's generally the common theme all the way across Canada, especially on the detached home side. So we're going to dive into that a little bit more, but lots of great information here. Months of inventory, sales ratios, all that good stuff. But let's dive into who we're going to talk to and where I got my insider information from. So this is a group of beautiful people. These are my contacts from some of the major markets we're going to talk about today. So we're going to talk about Moncton, New Brunswick, Hamilton, Burlington, the Greater Toronto Area, Winnipeg, Manitoba, Saskatoon, Calgary, and Greater Vancouver, Fraser Valley, before we come back home to the island. So these are all great agents that I've had the pleasure of doing business with. I've sent clients to them. I've had clients sent to me, really true professionals who really know their marketplace. And even with them being super busy, they were all able to get me a little bit of information for tonight's meeting. So Jocelyn from Moncton, really her main theme here, and we've got some stats here that I'll blow up for us. She didn't really have a lot of visually pleasing stats just with how busy she was, but her main notes that I've got written down here is that it is a great time to be a seller in Moncton, but it is a very challenging part right now for buyers. And similar to how we've been feeling in Victoria about a lot of mainlanders coming from Vancouver and starting to influence prices here. They're getting the same thing in Moncton, but they're getting them from Toronto, they're getting them from Montreal, they're getting them from Quebec City, they're getting them from Ottawa, because the price points in Moncton are very affordable. People are now finding Moncton to be that great space. It's a bilingual city. So, I mean, again, people from Quebec or from English-speaking Canada can go there. Price points, I think your average, you look at your average sale price for a single-family home, and we're talking between 150,000 to, I think, a high here of 350,000. So again, if you're coming from the GTA where your average home price is around closer to 950,000, and you're looking to retire, or if you're someone who can work from home, maybe you're in the tech community, Moncton is one of those little micro markets now that is becoming a suburb of major cities because of work from home and where we're going with technology. So lots of good information here. Just talking about the total dollars sales volume. So, I mean, they've had big growth. I think sales were up about 8% this year. Prices were up on average about 12%. And supply is down 17%. So we're talking, again, a very strong seller's market. On the investment side, she did say for, the tips, if anyone's coming there, she still does see single family detached homes being the best investment opportunity. Like Steve and Randy talked about, you put a suite in downstairs, you rent it out, you create some leverage and move forward. She said the other unique opportunity right now, she's not a commercial realtor, but she's seen because of the retiring baby boomer population and also the previous generation, the small amount of 12 to 18 unit apartment buildings, there's quite a few of them in Moncton that are quite old. They're from like the 60s and 70s and 80s. Well, those people are now looking to get rid of them. And so she said there's been an big influx of capital coming from Toronto and Montreal as well. But she has been able to help some smaller to medium-sized investors do kind of joint ventures, which this group talks about a lot, and buy these properties, do the BRRRR, and then start leveraging those out. And with the influx of new people coming to Moncton, they are looking for rentals before they necessarily buy. So yeah, some really unique opportunities in Moncton at a very, very affordable price point when we compare to some of these other markets. So some great information there. And Jocelyn LeBlanc would be your contact in Moncton. So feel free if you'd like some more information from Jocelyn. So let's get into Ontario. Here we got some information on the Hamilton-Burlington market. So these are markets, of course, a little bit south from the Greater Toronto area. Hamilton, always known as a steel town. So it's always been known for its industrial kind of vibe. But it's got an airport. That airport is continuing to expand. And again, more people are leaving the GTA and they're coming to these more affordable markets. But as you can see, sales are up 41.6% over last year. The average price is up 25%. Active available listings down double, 52%. So you're going to see a common theme as I continue to go through these areas. But these people as well is when I start talking about the Victoria market, we're seeing a lot of people now selling out of these Southwest Ontario belt, and they're coming their way out to the island. They want to live the island lifestyle. They want those warm winters, right? It was beautiful and sunny today. I got outside and got a chance to enjoy it. So some great information here from Stephanie on the Hamilton market. Again, she's going to break it down a little bit here for us on single family homes versus multifamily. So we have some townhouses here. Townhouse sales up 52%. Row housing is another common theme that I heard from a lot of agents across Canada, is as single family home prices continue to increase and spread from where condo prices are, more and more people are looking at that townhouse as that missing middle, that next step in the property ladder. So again, if you're someone looking at doing small developments in any of these markets, row housing, duplexes, triplexes, really popular and in high demand in a lot of the markets that we're going to talk about today. So again, you can see that very evident in the stats here from Stephanie. And even apartments in Hamilton, Burlington, she said, prices aren't going up quite as high. This is, again, a common theme is with COVID, people being quarantined, people being in lockdown, and a lot of people working from home. The general theme is people need more space, right? So even if you're in a 1-bedroom, you're trying to get into a 2-bedroom, or you're trying to get into that row townhouse. So maybe you can have a bit of a yard. So again, if you're in lockdown, and our friends in Ontario, I believe, are still under their curfew. So hopefully they're joining us from the safety of their home right now. Again, so apartments are still doing strong in some markets, but we'll talk about it where condos are a little bit softer in some of the other regions that we're going to go through today. And this just, again, more really good stats on individual kind of sales units. Here's just some really good commentary from Stephanie. Some of these I've already talked about here tonight. Just talking about lower listing inventory, upward pressure on house prices, and then again, the shift to single family homes. We'll again, some stats here. And again, low interest rates. Again, the common theme with the government really trying to stimulate the economy right now. The low interest rates are really motivating people from across Canada. Shouldn't be too much of a surprise, but even people that didn't think they'd get into the market this early, a lot of people are jumping in right now with the rates being so low and prices being a little bit more affordable. And of course, the exodus to the suburbs. So a lot of those suburban markets outside of major cities are really feeling an expansion of prices really quick. So Stephanie's message hasn't changed. Get into the market. Each year, the housing market's made huge gains and shows no signs of slowing down. There is aging inventory in the area. So some of the individual markets that she sees in her neighborhoods are the Waterdown area. They've done extremely well so far. She talks about Hamilton Mountain having really large lots. So people are looking for those either for just renovating older single family homes. Again, they're looking for more space, more yard space. And that Niagara region, which we talked about in that earlier slide, it's had about 110% growth. People are going even further south. So they're leaving Hamilton, Burlington. As the Toronto people push them out with higher prices, the Hamilton people are now heading down to the Niagara region. So, and again, if you're working from home, there's no more commute. So just a lot of great opportunities in this market and one of the strongest markets in Canada right now. And again, just talks about some other markets that you can look for. South Burlington. Burlington's known as a little bit more of an expensive area. A lot of luxury homes, bigger lots, really nice place. I believe that has some frontage onto Lake Ontario as well. So a great spot if you're looking to downsize or maybe retire out of the GTA. So there's Stephanie, amazing. She's a director of the Hamilton Real Estate Board as well. I've been pushing her to hopefully be president of that board one day too. So yeah, please reach out to Stephanie if you have any questions in Hamilton, Burlington. And Toronto. So, I mean, we always joke that Canada revolves around the GTA, and sometimes they like to let us know that. My good friend Taylene Mirzan put together a really good presentation here for us. The main thing here, 95,000 home sales in 2020 in Toronto. That's the third best result on record. Average selling price in Toronto has now increased to a new record to 930,000. So even with Toronto having some of the harshest lockdowns and some of the harshest restrictions, they're still breaking records in the GTA right now. They talk a little bit about the economy of Toronto being a bit of a tech hub. And again, use of technology for even open houses and things like that allowed them to still have a very busy year, all things considering. And then just really talks about the condo versus the freehold market. So Toronto, Vancouver, even parts of the downtown core of Victoria, the downtown cores of a lot of major cities right now the condo prices have felt a little bit of a decrease only because, again, people are heading to the suburbs right now because they can get more space. They can maybe get a yard versus the price of a condo in right downtown Toronto. So again, they're feeling that same effect in Toronto right now, but there's still great opportunities. And actually, when she gets into some of her suggestions, again, lots of great stuff here. She's predicting 2021 will be another seller's market with, again, persistent supply shortage and rising prices. Growing demand. Remax outlook for Toronto real estate is a 6% increase in prices to approximately 974,000 across all property types. And Toronto currently only has 2 months of active inventory available. So even with all those pressures and severe lockdowns, things are very, very strong in the area. But again, she does note that Toronto's condo market is currently a buyer's market. So she said, again, if you're looking to get in, there are some opportunities in the condo market right now. But she said rents have also started to flatline and decrease a little bit right now in the downtown core. So she said you'd really have to talk to her and understand what you're looking for there. But if you were someone that, say, needed it for a family member, you were sending a kid to U of T, I mean, there's a really good time right now to buy a downtown Toronto condo for a really good price. Yeah, I just saw the request to zoom stuff in, so I will do that. Thank you. Again, talks about remote work, migration. I mean, Toronto, when the country is back open again and the borders are open again, Toronto will have some of the largest amounts of international immigration. So that's what continues to fuel the Toronto market as well. And best place to buy. So we're gonna not go through all of these because Taylene gave us a lot of great information. But again, please request this. Slide deck and information package from us after, because Taylene's given us the best place to buy in Toronto, the best place to buy in London. I've been to London, Ontario. I love this region. And if you look here, average house price in Toronto, 958,000. You go out to London, which is about an hour and a half, 2 hours away, you're down to 530,000. So again, if you're looking to invest, where are you looking to go? Well, you want to be close to those major hubs, but you want to be a little bit far enough that you're getting that affordability, knowing that those suburban prices are going to continue to increase as more people leave the big city, as more international migration brings people into the downtown core of that city. So we've got options for you in London, Barrie, Kitchener, Waterloo, which we know is a very, very hot area. She's got Peterborough in here for us. I know a lot of great people in Peterborough. It's just south of Lake Country. It's kind of like our, Couch, just south of our Cowichan Valley. A lot of great opportunity there. And Cottage Country, talking to my friends in Peterborough, Cottage Country went off this year. It's kind of like Lake Cowichan here. Like Lake Cowichan prices have exploded on the island. Lake Country up in the GTA and Southwest Ontario has gone absolutely nuts. So again, if you're even looking for a recreational property, I have clients that just moved here from Toronto. They bought a cute cottage in just outside of Muskoka, and they've got it rented out, and they're just going to let that thing. And in the last 2 years, it's already gone up about 18% in value, and they've got that thing rented out to a great couple who wants to live there full time. So, I mean, even recreational properties can create a unique atmosphere depending on what location you're in. St. Catharines, Hamilton, we've talked a little bit about Hamilton as well, but a lot of great information here from Taylene, so we'll make sure to get that out to you. And again, if you need any information, Taylene is your girl in the Greater Toronto area. Okay, let's go and see our friends in Winnipeg. So I always bug my friend Amber that you couldn't pay me enough, unfortunately, to live in Winnipeg. It's a little bit too cold for me, but I'm sure we probably have some Winnipeg Jets fans here. And, I'm always a fan of the Jets. She's done a really nice little quick synopsis here for us, right? So 17% increase in sales, 21% increase in dollar volume. So that means prices are going up and the amount of sales is going up. So again, great for the overall strength of the market. Detached home prices are still super affordable. I love the comment about losing to Toronto. I love that. House prices are up 5%. So it's a little bit more modest than some of these other markets. Because Winnipeg it's the capital, it's a government town. There's a lot of industry there. But again, it's not a city that I find a lot of people move to unless it's for work or for family or something like that. But still, it's the main hub of Manitoba, pretty stable government there. A lot of good things in the Winnipeg area. A lot of aviation is done in Winnipeg. And again, sales in rural properties, rural municipalities were up 40% compared to Winnipeg's just 7%. So the two rural front runners were Steinbach and the Morden and Winkler areas. And so again, even in the Winnipeg area where prices are more affordable, there's that same theme of people leaving the downtown, city core and going out to those suburban areas, either for more affordability or just for more land and space. So again, this theme is very, very common all the way across the Canadian market.
Hey, Kyle, just going to jump in here real quick and just give you a time heads up. So we got about 7 minutes until we want to start some Q&A.
Okay, sounds good. And then just really kind of diving into the Winnipeg area as well. So I'll skip through some of this other stuff for Winnipeg, but you can always find it there. My friend Ryan Bamford from Saskatoon really just gave us a quick update here on the Saskatoon market. Again, sales saw an increase of 35% year over year, wrapping up year to date was 18% year over year. New listings came up 14%. Saskatoon and Saskatchewan are feeling some of the effects that Alberta is as well, due to oil prices and things like that. So there are some unique opportunities there. Ryan said as well that the best place to invest right now in Saskatoon is the infill lots in the city core There's lots of new development around the suburbs, but he said he sees the best potential over the next 5 to 10 years being buying those older 50s and 60s homes, putting the suite in downstairs, and then renting that thing out. And Saskatchewan's a lot more diversified, I find, than Alberta. So again, some unique opportunity in that market. And talking about Alberta, my good friend Zach, lots of great stats here from him in Calgary. The second half of 2020 was better for Alberta. I mean, as we saw, single family home prices did go up about 1.5%, but single family home prices are still down anywhere between 12 and 18% from where they were at their highs in about 2015. So of course, a lot of this is driven by the local economy, oil prices being down, the energy sector kind of diversifying right now, and we're looking at more energy efficient and sustainable things with electricity. So Calgary is still going to be on a road to recovery. But Zach's suggestion is, if you're going to invest in the Calgary market, invest in detached homes or row townhouses. Those are the two segments that did the best this year. So again, these guys, these agents, you can see how well they do. Here I've got a ton of information on the Metro Vancouver areas. This came from my colleague, Tim Hill. I'm just going to get this going here. Sorry, guys. I don't know why that's not. Oh, there we go. Sorry, guys. So Vancouver, I've got a lot of great stats here. The Vancouver market has come back roaring, right? The Vancouver market really started slowing down in kind of at the second half of 2017 and into the tail half of through most of 2018. A lot of this was psychological. I mean, of course, the government has come in with the foreign buyer tax in BC. Vancouver also has the empty homes tax. We have the speculation tax in BC right now. So we did see a lot of people pull out of the market in Vancouver for about a year and a half because they wanted to see what the effects of the foreign buyer tax and a lot of those other speculation. And thank you, Steve. And that's really what we've seen. There was actually just an article in the paper this morning that BC residents are now the biggest proponent or the biggest share of payers of the BC speculation tax. So the tax was specifically designed to target foreigners and out of province people. And in the end, it's actually just the Canadians BC residents who are ending up paying it. So, I mean, if that means that a lot of foreigners and out of province people have rented out their properties, well, then I guess that is a good thing because that was the hope of it. But in the end, it's not really slowing down the market as we've seen this year with all the price growth across Vancouver. Single family home prices are up about 7% across Greater Vancouver. In the Fraser Valley, that is the area that's performed the best, with prices being up anywhere between 7.5% to 15%, depending on the region that you're in. So great opportunities in the Fraser Valley. Price points are very similar to the Victoria market, but a lot of new development. There's a lot of land opportunities in the Fraser Valley, North Delta, Langley, Port Coquitlam. Lots of great opportunities there, and Tim Hill will be your guy there to be able to help you out. And then, knowing my time is getting tight, let's get back to Victoria. So here we have our great HPI map, and this really breaks down price increases in Greater Victoria over the last year. So we've talked about this all year as we've been doing our updates. Just like Victoria, like everywhere else, the suburbs have outperformed a lot of the other areas. So we look at North Saanich, up 14.7%, Sydney, 14%, Central Saanich up 17.5% year over year. That's the biggest winner. Souk, though, also, I've been beating the drum of Souk for a long time now. Anytime you drive out to Souk, you're going to see a lot of activity. They are continuing to expand the highway out to Souk, making it safer, which means more people are going to want to live out there. Souk's prices are up 16.5%. So how does that compare to the bread and butter areas that everyone thinks about in Victoria? City of Victoria, up 6.7%. Oak Bay, we saw a resurgence of luxury listings sell this year. Again, even people at those higher price points were looking to have more space, looking to bring more home offices or room for their kids to do homeschooling. So Oak Bay was up 8.5% this year. Colwood, View Royal, up 7% on the single family home side. Condos have been doing great in View Royal as well. So just a lot of great price growth in Victoria, considering we were in the middle of a pandemic. Again, just talks a little bit about unit sales. The main thing I want to talk about, though, in Victoria, like a lot of these other markets, here's your average selling prices in Victoria. This is a great line that I always show people when they want to know about, is it safe to invest in real estate? We always have our little ups and downs. We saw that in the 80s. We saw that in the mid 2000s. We saw that a little bit in 2017. But again, this chart kind of explains everything. Even condos, where people say, oh, condos aren't a good investment. Well, there's still lots of opportunity in condos in good locations. Sales to active listings ratio. This is an important one. This is how we know if a market is in a buyer's market condition, balanced, or in seller's market condition. So anything above 20% sales to active listing ratio means we're in seller's market condition. So that means for every 10 properties that come on, 3 or more of them are selling. We look at this chart right now. We ended the year at almost a 70% sales to listing ratio. For every 10 homes that come on, 7 of them are selling within that given month. So we are in overall extreme seller's market conditions right now. If you are looking to invest in the Victoria market, I highly suggest getting in at the single family home area, or looking at doing some land plays with development, row townhouses, again, duplex, triplexes ring true again here. There's some good stats here about where are buyers coming from, especially in a year where the international borders are closed. There's some good information here on where we get our buyers. And just to finish it off, this is the chart that I really wanted to show. This is active listings in Victoria. We are under 1,300. We were under 1,300 active listings at the end of December, and total MLS listings also include commercial listings, which is about 300 to 400 at a time. So when we ended 2020, we had less than 900 residential listings available from Souk to Sydney to Shawnigan Lake. When you break that down to single family homes, there's less than 350 single family homes on the market right now. So we're seeing competing offers everywhere. And I think this is going to continue going into 2021. We don't know where new supply will come from. The builders I'm talking to are 6 to 8 months out because they already have so many construction contracts in place. So I think we're going to continue to see robust markets. Most of the feedback that I've gotten from across Canada is the same. Besides maybe some larger macroeconomic issues, taxation, regulation, most agents are predicting a very strong 2021.
And those are things that you can't control anyways. And like looking back, if you spread that graph over time, like the one that one there, if you spread that back to, let's say 2015 even, right? Listings maybe 2,500, 2,800, maybe even low 3,000s, right? And you're still seeing like a balanced market. And that was like, even in 2012, like if you go back as far as 2012, it's still like, it was never really a buyer's market in Victoria. And that was the bottom of the bottom in 2011 and 2012. And so looking at this trend where you have so little listings and you compare that to, we don't have it handy here, but when you compare that to what the projected immigration is into Victoria, and if you net out like people passing away and people moving out of Victoria, and you still create that net from people in versus people out, which it's still like 5,000 people a year. And we're only building like 1,200 homes, which fit 2.2 people on average. And so there's still this massive inventory issue, which is going to be kind of that like that really low floor to fall onto if the market does, disappear on us kind of thing.
Exactly. We're predicting another 65,000 people will have moved here by 2035. So that's like a whole nother city of Victoria almost.
Yeah, it's ridiculous. And to all the Victoriaites, Victoria.
Do you want me to? I'll stop screen sharing here, Steve, so we can jump back.
Sure. Yeah, sounds good. To all the Victorians that are here, like one of the biggest things that we as the public really need to focus on doing is communicating to our councils and our staff in our municipality to express the need for more density and for more developments and for more projects. That's one of the biggest affordability issues across the country right now. Is it's not incentivized enough for developers to go and build inventory so that more people can live here, so that prices actually don't continue to skyrocket. Maybe they plateau for a couple of years, and my generation or the next generation, who's the 22ers or whatever right now, can actually afford to get into something. That's something that didn't intend to go on a rant on, but thanks for giving me that space.
Oh, no, you need to. And I mean, this is why it's important to attend your council meetings. If you ever get a rezoning letter in your mail, just email your planning department, email your local councilor, say, I approve this development. If we don't build more housing, as Steve said, the affordability problem is only going to get worse and worse. And hey, we're all here to make money. We're all here to build equity and build wealth. But I think we all want inclusive communities that everyone can live in and that our family members can live in. And people don't have to move out of town because things are too expensive. We can have both. We can build wealth together and have affordable housing. Like the two do not have to be separate.
Sweet, man. Really appreciate all the work you did on that. Everybody give Kyle, I'll stop sharing so you can see everybody. Give Kyle some happy hands here because he did a lot of work connecting with people all across the country to bring in all of that data. Like you saw, there's 116 pages there. We'll get to you if you want it. But dude, that was awesome. Thanks for that breakdown.
Yeah, thank you.
If you were going to pick a specific product, just because we do have 5 more minutes, if you're going to pick a specific product, it could be SFDs, could be triplexes, fiveplexes, development, townhouse, condo, commercial, warehouse, one unique product, just be specific around it to invest into for 2020 that you could buy now and be like, yeah, you know what? I got it made in the shade. What would it be?
I think it's the standard tried and true single family home, and then trying to add as many suites within that home as possible. I think there are some municipalities, City of Victoria, City of Saanich, that are looking at starting to allow more density within the single family home form. City of Victoria is looking, they've just approved carriage houses, and the next step is to allow you to keep your secondary suite in the basement and also have a carriage house out the back. So I think anytime you can secure land or a single family home type property, that is the bread and butter, because again, on the island, it's all about land. If you had deeper pockets, then yeah, buy up land now and start looking at joint ventures with developers like yourself. Because again, there's going to be more municipalities are finally going to get the message that you just mentioned. And I think we're going to see an eventual kind of breaking of the floodgates, getting more density approved quicker. And certain municipalities, Langford, Colwood, View Royal, they're hearing that and working on those things. So, that's where I'd be looking to growth sectors, Shawnigan Lake, Souk, but single family homes always.
Me too. I'd go single family home, Saanich area, like an acre. That's not ALR. And that you're going to, like in 10 years, you're going to be able to subdivide that thing and retire for the rest of your family for life kind of thing.
Exactly.
Right on. Well, we have like time for one question to Kyle from the audience before we move on with our presentation. I haven't seen any in the chat yet. Randy, do you have a question for Kyle maybe to fill in time? If not, I've got plenty.
No, I just am blown away by some of those numbers and statistics and what things look like, and just excited to see where it goes. My only question was just going to be around pre-sales. Is there still some game there for investors to be able to buy a pre-sale, watch it sit for 2 to 3 years, and then be able to flip it out? Is that something that's still going on in these communities that people can take advantage of?
Pre-sales, it depends on the location of that. And if we are referencing condos, like I said, the condo market, condo prices in the West Shore are up about 9% year over year. Condo prices right in the downtown core are down about 7 to 8%. So, there's many layers of why the downtown core is having more challenges because of COVID and some of the shelters and things like that. But the interesting part though, is there's not very many pre-sales being offered right now. The interesting part on pre-sales on the single family home side. So we think about Bear Mountain, West Hills, Royal Bay, those kind of pre-sale single family homes where you just buy the dirt and 6 months later your house pops up. I'm trying to find those types of properties for my clients right now. Everyone's sold out. Like Royal Bay is like, we have 40 people under contract. We can't build enough houses. Bear Mountain's the same way. Most of the developer reps that represent single family home builders say they're not looking at releasing any more inventory for the next 6 to 8 months. So if you can get in, if you know what some of those reps, and we are working those relationships, I think there's a great opportunity on the townhouse and single family home pre-sale side more than the condo side.
Nice. Fire round, 10 seconds or less. How much value does a basement suite add to a home?
50 to 75,000, depending on how much income it can bring in.
What's your opinion on Comox Valley?
Love it.
How much have a hassle has it typically been to get a carriage house put in?
A lot better in the City of Victoria. Saanich is still a bit of a quagmire because it's so brand new.
Awesome. That was phenomenal. If you do have any questions, additional questions for Kyle, here's his contact information again. Hope it's okay to put your cell phone there. And I figured in the industry, that's a pretty normal practice.
It's on signs, so we're good.
Right? You get many prank calls at all?
Once in a while. Usually it's just my buddies, but once in a while yeah.
Lou, I believe it.
Yeah.
Awesome. Well, let me go back to this here. Thank you so much, Kyle. That was a
You bet.
ton of information. Really loved that you put in all that work, man.
And those that were asking, we'll get those slides out to you
After
from
this as a
Kyle,
follow-up.
and have that available for you. Cool. Well, I'm very excited to introduce you guys to our next speaker. I want to take 1 second and shout out Kyla Graham, who changed her name to say, Kyla Graham, looking for JV partners. Here's my email.
Nice.
Shout out to you, girl. That's how you get attention, and that's how you make things happen. For those of you looking to make friends in this group, that's how you do it. So awesome.
Yeah, thank you.
No worries. And if you guys didn't see, if you can hop into the REINVESTORS community on our Facebook and ask some of these questions, because there's going to be a lot of great answers there from people who are doing just this. I am excited to announce our next speaker, Megan Becker. She's co-founder of Century West Financial. We met Megan a few years ago. Many of you have probably seen her present. She can speak on so many various different topics because she's so well expanded in her knowledge. I was just talking with her today. She just lost out on a real estate deal because she's an active real estate investor. Unfortunately, it didn't work out, but she is doing builds. She's done joint venture properties. She's done flips. She's done it all. So when we talk about financial advisors, we don't just want to go to somebody at the bank who doesn't understand what the process looks like for us as investors, because it's so different. And that's the one value that I think stands out for the most with us, with Megan, is that she understands a well-rounded portfolio of having some different types of real estate assets, some stocks and bonds, as well as other types of investments. And she can really speak the language. And like Steve, his parents are working with Kyle. My parents are working with Megan. So when we back up our sponsors for this meetup, we don't just bring them in for just because we know them or they're the top name. It's because these people are actually working with our families and with us. Steve and I work with Megan. Steve and I work with Kyle. So when we bring these people in, that's why we do it. So
it's the secret sauce, man.
Yeah. And so when we were chatting with Megan about tonight's meetup, the one thing I hear quite often in the industry that maybe is not as advanced, but a lot of people coming into real estate or have some extra funds go, hey, it's coming into RSP season. I have some extra cash. Should I put it in my RSPs? Should I put it in my TFSAs? Should I invest it or should I save it? And that's why, we heard that a few times over the past few weeks. And I said, Megan, can you hop on the call and just answer questions and walk people through what that kind of looks like? And she was a yes to that. So thank you so much, Megan, for coming in. And if Steve wants to stop sharing his screen, we can give some happy hands here for Megan Becker.
I love the happy hands. Good evening, everyone. Thanks for having me, guys. I did lose out on a deal yesterday. I'm still a little bitter about it, so I'm trying not to let that overtake me right now. But yeah, I am an active real estate investor. I'm a financial advisor here in Victoria. And when Randy reached out about just talking about a little bit more about the RSPs, I thought it might be a good idea just to go back to basics. It's likely that everyone here would have some understanding if they're venturing into real estate investing of marketed securities that you can hold in your RSPs. But I still, like every January, I still get a slew of emails with people asking, should I put money into RSPs? I have 2 months. I really want a tax refund. Can we, how much should we be putting in there? And it's really, for the people that are not my clients, these people don't necessarily have the basis of, okay, well, why would that be necessarily the best move to make, essentially sporadically, just because you've seen on TV that it's RSP season, get those contributions in before the end of February. So I just wanted to go, like I said, go back to basics. So I'm going to share some slides here. Technology is not my friend.
Perfect. We can see it.
Okay, so to touch on what registered retirement savings plans are, there are a bunch of features about this, about RSPs. Essentially, it's a retirement savings plan and investment vehicle that employees and self-employed people in Canada can utilize as long as they have T4 claimed income. That's how you get the contribution room each year. So one of the most common benefits that people are aware of RSPs and what draws them to it is the fact that they get the tax deduction and that tax refund. So like I know when I was 18, my dad told me that I had to go buy some RSPs in January, even though my income was probably like 20,000, maybe. I don't even know if it was that high, but that was what I needed to do. So it is very enticing for people to be able to save some money and get some money back. It seems like kind of like a windfall, but they don't really understand if that's the best vehicle. They don't know if that plays into their overall plan. So that's, I feel like, one of the biggest downfalls of RSPs, that people kind of just do it because it's what we've been told to do. So another benefit to RSPs is the tax sheltered growth. So any money that you do contribute to your RSPs, it grows tax-free until the time that you do withdraw it. At that time, it is taxed at whatever your marginal tax rate is. So the premise behind RSPs is that you're going to contribute during your prime working years, and then in retirement have the thought is that you would have less income, so your marginal tax rate is going to be lower. But that was the main premise behind it. I know personally for me, I don't really want to have that much lower of an income in retirement than I do now. But time will tell. But again, that was the main premise behind it. Contribution limits are linked to a person's claimed T4 income. So you can contribute up to 18%. Up to a $27,830 maximum for the 2021 tax year. So each year that contribution does carry forward, and it just grows if you haven't actually used it. So that is one of the strong features of it, is that you amount to a pretty significant contribution limit over the years, which is it's one of its strongest features. So under the RSP program, there are two plans that actually allow you to withdraw that invested money or that saved money and not immediately get that tax hit. And that's the home buyers plan and the lifelong learning plan. So under those plans, so the home buyers plan allows Canadian residents to borrow up to $35,000 of their RSPs to use as a down payment on a qualifying home. So after the year you make that purchase, you either need to begin to pay 1/15 of that borrowed amount back, or you take 1/15 into your claimed income for that year and pay tax on it that way. Benefit there being for people that are trying to accumulate, if you do utilize if your plan is to utilize the home buyers plan, and you do put your investable assets into there, you get that refund and you recontribute that refund. That's really the best way to be able to utilize that program, in my opinion. But yeah, so it does provide some flexibility for people that have contributed. The lifelong learning plan, it allows people to borrow up to $20,000 of their RSP funds to use for full-time training or education for them or their spouse, not for children. That's RESP. So again, you have a certain period of time after that begins that you have to begin paying it back, and it has to be paid back over a 10-year period. Otherwise, again, you would take 1/10 as income each year if you don't repay it. So those are two features that they added into RSPs to make it a little bit more flexible for people that were saving, but also wanting to try and buy homes and potentially improve their education. But there are definitely limitations to RSPs. And I think I've already kind of mentioned a couple. So the fact that you can only really access the funds there by taking a big tax hit, that's a big limitation. Like I have a number of clients or people that come to me and say, I have hundreds of thousands in my RSPs that I've contributed over the years, and I want to go buy a house, but they can't do that. If they're not a first-time home buyer, they can't take out the 35 and they can't access that money to just decide to go buy a home without taking a really substantial tax hit. And I think that that's one of the biggest constraints with that program is your funds really are locked in, and you have to then come up with a plan to be able to tax it, to be really efficient by slowly withdrawing them. And again, if you don't have a lower income in retirement, so Victoria is a government town, so there's a lot of pensions here still. And if you are one of those people that is fortunate enough to have a pension, your income in retirement may be relatively similar to what you are working or are making in your working years. And in that scenario, then you may end up paying more depending on your other assets as well in retirement. So that's in my opinion one of the biggest restrictions. At 71, it does automatically turn into a RIF. So if you haven't started taking funds out of that RSP, then you have to take a prescribed minimum each year, whether or not you want. And really, a lot of people have some issues with the fact that RSPs are government, like they technically, part of that contribution is owned by the government. It's their tax dollars. You're gaining from the compounding that is happening and the growth that's happening in those accounts, but that still is a big portion of their money. And a lot of people don't really like the idea of having the government that close to their pocket. So that's something that I hear from a lot of clients recently. Actually, they're just very apprehensive with how much debt the government is taking on, and they're worried about the longevity of programs like this. So that's kind of the basics about RSPs. I know Randy has some other questions in pertaining to them for me in a little bit. So we're going to go into tax-free savings accounts. So tax-free savings accounts, they are a newer vehicle. They were created in 2009. And again, with the same premise, both of these programs were instituted so that to try and encourage Canadians to save more money for whether it's for, well, ideally retirement, because they don't necessarily want you relying solely on CPP, because CPP isn't enough to get people by. So a tax-free savings account, it's an account in which the contributions, anything that's earned in it is not taxed. So it's a little deceiving in the name because it sounds like it's just a savings account, but you can hold essentially any of the same investments that you could hold within an RSP in a tax-free savings account. A lot of people get really confused as to the fact that these are just the vehicles and they're uncertain. They think that a mutual fund is potentially not something that they can be held within it, but a mutual fund is its own thing, as opposed to these being the vehicles, and you put either stocks, bonds, mutual funds, mortgage loans, anything like that into these types of accounts. So in regards to contribution room, so it started in 2009. If you were 18 in 2009, your total contribution limit in 2021 would be $75,500. So for the first few years of the program, the amount that you could contribute was $5,500 a year, and that accumulates. In 2000 and what year was that? I think it was 15. We had a $10,000 contribution limit for that 1 year, and for 2019 and 2020 and for this year it is 6,000. So that's where the 75,500 comes from. So it's not quite as you can't hold quite as much money as most people tend to be able to hold in their RSPs in a tax-free savings account, because you're not necessarily your growth your contribution space isn't tied to your income. It is just tied to a prescribed amount that they're allowing you to put in there each year. As time goes on, that amount will obviously increase. So each year, I think it becomes a even more advantageous of a program for people to be able to utilize. So you can use it as a savings account. You could have it with your bank and just put the 0.1 interest that you're earning into that account if you so choose, as opposed to having to claim that. I don't even know if it'd be $100 at the end of the year. I hope not. Or you can actually put investments into it. The big highlight to this is that anything you do put in there of your after-tax income grows tax-free. So say you are investing in some really great stock and it doubles, you're not paying any tax on any of that growth. So that is one of the biggest features of it. You don't get the tax deduction because you're using after-tax income to contribute, whereas the RSP is pre-tax income. The minimum age is 18. So if you turn 18 in this year, you only begin accumulating from this year forward. So the $6,000 that's already there. Cons, again, the contribution limits are limiting 75,000. It's a good place to be able to save. I see a lot of people utilizing it to save up for a property, and then they take it out, go buy a property, and then they regain that room in the next year to be able to utilize. So it has its place. I think it's an underutilized vehicle that people could take advantage of. But a lot of people just don't really understand the difference between this and the RSPs. So hopefully that kind of clears some of that up.
Can I just ask a quick clarifying question?
Yes.
Somebody sent me a private question, which I think was meant to be to everybody. But let's say you take your example of, you bought Tesla in your TFSA and it went through the roof. And then year 2021 comes back and you can put $6,000 back into it. The growth that you saw doesn't include the $6,000, right? It's only like the $6,000 increment growth is what you can pull out of your pocket and put in, regardless of the growth that you've seen in your TFSA anyways.
Yeah, the growth can be unlimited within it, but you can only contribute up to the maximum. Yeah. So that's where it's really valuable. So you could have way more than $75,000 in there. If you're investing $75,000, I would hope you would have way more, because you should be getting pretty decent returns that are going to compound again. And that's one of the benefits of both of those accounts, is that you're utilizing the compounding, right? So there are vehicles that encourage people to save. So that's great that people are putting money into them, and that money continues to compound. So hopefully over time, the money you do have in there is going to outweigh what your actual contribution limit is. And then in terms of non-registered accounts, so non-registered accounts, they are just essentially a taxable investment account, so available to any Canadian. As the name suggests, it's not registered. So that means that the Canadian government doesn't have their hands involved in that per se. There's no contribution limits. Anything that you contribute, you're using after-tax dollars. It can be used as a savings account or an investment account. So essentially, if you just have like a daily interest savings account at your bank, essentially that's a non-registered account. It could be, you could put investments in there. All income that's earned is going to be taxed appropriately. So you're not gonna have any delay in taxation. You're gonna get your slip at the end of the year, and you're gonna have to claim that on your when you file your income tax. As for contribution limits, there is no limit. That's one of the great features. There's really nominal restrictions. There's some tax advantages. I see people utilizing non-registered accounts very often because I deal with people using the Smith maneuver. And with the Smith maneuver, in order to take advantage of the tax deductions, you need to be investing the money in a non-registered account. So it's something that I see a lot of people utilize. Again, these are just 3 different types of vehicles that you can use to save and invest, and really utilizing all of them is the way you come up with your best, most strategic plan. And you really do need to work with an advisor kind of to be really cognizant of which you're choosing and why. So some of the benefits of the non-registered accounts, you're going to be, there's tax advantages in terms of you get to choose what you're going to invest the money in. So like you're going to invest in things that are producing dividends, then you're going to get a dividend tax credit. For capital gains, you're only going to be taxed at the 50% of your marginal tax rate. And then interest income, I think most people are aware you're fully taxed 100% at whatever your marginal tax rate is. So people really do, it's important to be strategic in what type of investments you're placing in a non-registered account. So outside of that, I think that's the basics in terms of like what investment vehicles are available. And I know Randy has a little slew of RSP and TFSA related questions for me. So I'm going to stop sharing.
Thank you so much for the information, Megan. It's such a hard topic to speak on because there's so many different varieties and everyone's story is so different and a lot going on. I really just want to bring that emphasis to what RSPs were, and they were so designed back in the day to help Canadians save for retirement. Now that we're a lot more aware of that, the strategy has changed quite a bit inside RSPs. You know, basically, if you look at it, it's designed so that as you make more money, you contribute more to your things. And then as you make less money, as you get older, you pull it out at the cheaper tax rate. But we as investors here, we want to be making more money as we retire. When I'm 60, 70, 80 years old, I don't want to drop my income to $20,000. I still want it to be 100. So as you contribute that money, if you're actively investing and trying to grow your portfolio, your income might actually increase. So even though you're putting money in now, you might actually get taxed higher when you go to start pulling it out if you're building a very successful real estate portfolio. So that's something that people really need to understand. For those that have contributed to their RSPs, how can they start investing it in different ways? I'll just give you a lead example of how do they make it self-directed? How do they start moving that money around and look for different investments if they're maybe getting 1%, 2%, or 3% with it at the bank right now?
Hope they're not getting 1%, 2%, or 3%. They need to speak to someone for sure. There's so many different options about what you can actually put into RSPs and TFSAs, to be honest. Like I know I have a ton of clients that utilize the community trust to essentially just create a self-directed RSP or self-directed TFSA, in which then they can essentially take on mortgage loans, so syndicate mortgages, and they're getting involved in real estate that way. Or people will do a self-directed RSP and do a private loan out themselves. So they'll loan, I don't know, Joe from down the street, as long as it's an arm's length transaction, they'll loan them $100,000 at, I don't know, whatever agreed upon amount they come up with. So there are a lot of different avenues you can go with it, but you do just need to know potentially people that are doing it, and you need to have those contacts, and you need to do your due diligence. Because again, with any type of investment that you're going to be doing, there's risk associated, and you just have to be aware of that risk and know your comfort levels.
100%. And it's becoming a more commonly talked about discussion of using your self-directed RSPs and being able to work them to actually start getting better things and using real estate as a vehicle to compound that growth on the back end, which is absolutely phenomenal. And I know a lot of people work with you on the Smith maneuver to start advancing some of their funds, right? I kind of just want to give you a plug for being a Smith maneuver certified professional right now, and how you're actually starting to help people build for a better retirement and building out that actual plan. We don't want to get deep into the Smith maneuver here. Can you give a 1 minute oversight of how people can use the Smith maneuver as part of their plan to start growing it?
Yeah, essentially for when it comes to the Smith maneuver, as long as you own a primary residence, you can have a re-advancing mortgage, which allows you to make your regular mortgage payment. The principal amount then gets re-advanced to a line of credit. You can then borrow from that line of credit to invest in that non-registered account. It can be self-directed. Essentially, you can hold any type of investment as long as it is that the purpose of it is to earn an income, then you can deduct the interest that's going to be attributed to that line of credit. So it's a really great tool for people to be able to access money each month that they are automatically paying, because most of us aren't defaulting on our mortgages. So we're making those mortgage payments, even if we don't have it in our budget to actively save or invest money. So it gives people that ability to take that principal and actually utilize it, instead of having to wait until their term is up in their mortgage and then decide if they want to pull out money. So instead, it gets you investing now. Compound growth is as my little Albert Einstein slide said, it's the eighth wonder of the world. It is what differentiates between really great net worth and really struggling because you just had a savings account and you didn't want to invest anything of it, or you got the 0.1% returns.
That's so great. I have one last quick question. Then if anybody else has a question they want to ask, just put it in the chat and we'll ask it to Megan here. So if you do have a question, put it in the chat.
And I have grabbed a couple of questions that have come through the chat that I'll list off before we get into any of the new questions, just so that it's in order.
Cool. And Megan, we also need your contact information as well in the chat, so that we can have people reach out to you if they have further questions or such. So my final question is, and plug to you, Kyla said that she's worked with you and Keaton on restructuring her mortgage for the Smith maneuver and is loving it. So there's a good little plug for you. The last question I have for you quickly is, you're working with my parents right now, and everyone, if you haven't heard, I'm pretty public with my story with my parents of how I'm really trying to take them from owning their home, living paycheck to paycheck. How do they turn that into passive investments and growing their thing? And so I guess my question to you is kind of an open-ended question of, why would somebody come to you that's maybe just learning about real estate investing or just learning about these kind of things? Like, how can you as a financial advisor really help them set up their portfolio, instead of just saying, hey, here's a insurance plan you need, let me take your investments and take a commission, then leave them? How is it important to work with an advisor that wants to set a nice plan for you and grow, using my parents as kind of an example to explain that?
So I think, what I think is the big difference is the education. Like, so when people come to me that aren't super confident when it comes to their finances, those are some of the best clients, that because I feel like they are ready to learn if they're already coming to see me. So being able to go through things and educate them on the different types of vehicles that they can use and how they can best utilize them to achieve what it is that they specifically want, because every vehicle is out there and does have some pros, some cons. It's just utilizing them in the way that's going to give you the best outcome, right? So I think education is very important. And I think that's one of the things that isn't there in transactional selling. So when you have someone that kind of just comes in to get their commission and pops out, hopefully those people are getting fired. But a lot of people will just kind of sit by for a while, or eventually they might change advisors. When it comes to looking at an entire plan, I think a lot of people get really overwhelmed from the idea of it. So working with a professional to really hone in on like what their goals are and kind of start where they are currently and start layering in pieces along with that education, I think it gives them a better, they feel a lot more confident in making decisions. And then we're able to look at all of the options that are available to them and how those options are going to either detract or work to their favor when it comes to their plan. And then they can make an educated decision as to what investment they're doing, whether it's a marketed security, whether it's real estate, whether they're doing some private lending. It's really, I feel like it just gives people the confidence to make an educated decision at the end of the day, instead of kind of just going with their gut and hoping it's going to work out.
Such a great answer, and answers everything that my parents just went through, where they had a financial advisor that they hadn't heard from in a year and a half to 2 years. They had no idea what their money was doing. They just don't know what they don't know. They thought that was the normal. And when I introduced them to Megan, They are now excited about their finances. They love knowing what their money's doing for them. They feel in control of what they're doing. And I've seen a total shift in their attitude just towards money in general. So that's not just to plug you, but that's just to plug what a good advisor does. It really makes you educated and excited to start getting your money working for you. So if you're sitting there and a little scared about what's going on in your finances, I recommend reaching out to someone like Megan or Megan herself that really wants to help support you get there. I know there's a few questions that came in, and we'll kind of rapid fire through them. Guys, it's 7:29. We're going to run 5 minutes late to answer a few questions here. So if you can hold on tight for 5
You
more.
can always email me them after too. If you have the contact information, I can shoot them back out.
Perfect. Steve, did you have those questions quickly ready?
I sure do. So real quick, short and sweet answer so we can rip through this as close to on time as possible. Can you borrow RRSP even if it's not the first time buyer, as long as you pay back the next year?
No.
Negative. No dice. Sorry, I think that was...
Is that quick enough answer?
Yeah. Perfect. Moving on. Can I buy Bitcoin with TFSA or RRSP?
Yeah.
Yeah?
Yeah.
All right.
I know, I'm trying to keep it really short and sweet.
Is a TFSA age 19 in BC, but you can get contribution room from the age of 18 as well?
I'm sorry, say that again?
Does it start at 18 and you'd get it 18? So this one I might need clarity on, but let me see if I can get through it. It's there near the bottom of the chat as well from Julia. With the pension and rental income, usually using RSPs to decrease tax payback, as investors concerned about higher income in retirement, do you have another suggestion as a way to lower taxes now?
Sorry, I'm just going to reread that question.
Yeah.
Pension, rental income. It's going to depend on each person's what they're holding and what type of investments they're holding, what they're doing with their money. So with a pension and rental income, yeah, there are options to lower it, but it's not a short and sweet answer. It's not a yes and no answer, so it's a little bit more dependent upon their specific situation.
Julia, I'd recommend emailing Megan, and she would happily answer that for you.
And community trust is like Olympia trust, yes.
Is there a way to shift money out of RSPs to something else, or something else somehow? I guess without being taxed. Is that the question? Who asked that?
Not without being taxed.
Yeah.
One of the questions that came out is, what province do you work with? You personally, Megan?
BC.
Just BC only? So Megan is BC only. But do you have recommendations for other people in other provinces at all?
Yeah, so if people reach out to me, I definitely have contacts that do like the fee for service and are maybe more real estate focused than the average. So
like Kyle Kerr, guys, we have some investment people here in Victoria, but they have connections all across Canada of similar like-minded people. That's the whole reason we bring them in, not because we want to use Megan specific, but start using people like that and like Kyle Kerr that are very customer driven. So
last question.
We want you guys to succeed, just like we do, right?
Totally. Last question, then we'll wrap up our deck. I've heard, this comes from Steve, I've heard of strategies that move RSP to a TFSA. Is that a real thing?
Complicated. It's a lot more involved than that. It's not just a direct move, no.
Gotcha. One of those other things that you need to reach out to Megan for. And I know Steve's here in BC. Awesome. Randy just put Megan's contact details in the chat there. So if you do want to reach out to her, that is the best way. There's email and phone. And she's got, what do you call them? Like testimonials, I guess, out the wazoo. Obviously, yeah. Randy shared his story in our community. A lot of people have worked with her. Definitely recommend reaching out if you have any questions as well. I just bombarded Megan with an email this long about my situation. So there's that. Cool.
Hey, you got to get some hands for Megan there. So go stop.
That's what I was going to. Okay. Yeah, I guess I need to stop sharing. My bad.
Hey, everyone, let's hear it for Megan in some nice things there. Thank you so much, Megan. We always appreciate you coming in and sharing and always just being such a great voice for so many different avenues. And Sue just asked, will this be available on replay? Yes, we'll have this out for replay for sure. Steve, you want to close us out? Take us down.
If this opens. Cool. Thanks for bearing with us, everybody. As we got through this, we're exactly what Randy said, 5 minutes passed, but it's looking awesome. So just as a reminder, if you do have some RSPs, TFSA, or cash you want to work with us on, reach out to us. Just hit us up at the email address there, info@REINVESTORS. We do this on a daily basis in our community. So if you're not in the REINVESTORS community, just hop onto Facebook, go to groups, search the REINVESTORS community, and there's this conversation taking place on a daily. It's a great spot to ask questions and connect with investors from across the country. There's almost 1,000 people in there now, I think. And if you did get any kind of value, or you just like the energy, or you just like Kyle or Megan's sexy faces, please give us a kick-ass review on Facebook, Google, whatever you can find. We definitely appreciate it, as it is a part of our mission to financially educate and inspire a million people so that they can invest in real estate to live a more fulfilled life. We can't do that without your guys' help. And as a reminder, put this in your calendar right now as we wrap up. Grab your phone, February 16th, 6 p.m. It's a Tuesday. It's the third Tuesday of every single month throughout the year, our next meetup. And as if you just joined us over, after the first 10 minutes, we have a absolute gangster of a speaker coming in talking about multifamily and some scaling a business side of things on the 16th. Really excited for her. And if you have any questions, you can reach out to us. We're on Facebook, Instagram. We just joined Clubhouse, so we've been super active on Clubhouse too. The website is just reinvestors.ca. There's our email. And I don't know if Darren's still here. Darren, if you're here, say what's up. We started a really badass mastermind earlier this year as well with investors from across the country. So if you're a high-end investor already active and scaling a business, reach out to us about that for next year as well. But that being said, that wraps up our first meetup of 2021. Everybody, give Megan, Kyle, Randy, myself, and everybody else on here who would engage some happy hands.
I love it. Awesome. Thank you so much, everyone. We appreciate you. We'll see you next month, or we'll see you in the REINVESTORS community. That's where we're at. If you have any further questions, our sponsors hang out there and answer questions as well. So if you have any questions, head in there. Have a good night, everyone. We'll see you later.
Take care, everybody. Great seeing you all.
Have a good 2021.
Thanks, everyone. Bye.
Make this amazing year.